Hello guys, welcome to my channel, and in today's video we're going to be talking about trend lines. Okay, so how to identify them on the charts, how to mark out your trend lines, and how to trade them profitably. All right, so today's example we're going to be using Euro USD. All right, for today's example, so I'm just going to go ahead and add a fresh one on the charts. Euro USD. All right, I'm just gonna add this one. All right, so here we have it, a clean new chart, right? So what is trend lines? A trend line is a series of support or resistance connecting the higher lows in an uptrend or the lower highs in a downtrend. Okay, diagonally is a series of what support or resistance connecting the higher lows in an uptrend or the lower highs in a downtrend diagonally. All right, so what do I mean by that? Remember we said that an uptrend, we have price moving like this, high, okay, a low, a higher high, higher low, higher high, higher low, and it keeps going higher high. All right, so an uptrend, these are the higher lows, right? We want to connect these higher lows, okay, diagonally. This gives us what? Our trend line for an uptrend. Okay, we remember our market structure. That's why we say that this is the basic. So if you still don't know market structure, you still have to go back and watch. I've made a video on market structure, basic market structure, okay, right here on my channel. So you want to go back and watch it so you can understand the basic market structure. Only then can you understand what we are doing right now. Okay, so remember we said that these are the higher lows. Okay, higher lows. So after you must have seen two two higher lows, okay, in an uptrend, you connect them, and then on the third touch point, that's our trade opportunity. So subsequently, price can go up, okay, and still come down. Use this trend line again, and we keep buying, okay. So, and that would be it. Whereas in a downtrend, we have series of lower lows and lower highs, lower low, lower high, lower high. Okay. So in a downtrend, we have these two lower highs right here. Okay, so you want to do what? Connect the lower highs, okay, and extend it. Sorry, you want to connect the lower highs and extend it, hoping for price to come back into that trend line and sell off again. Okay, so that's basically how to identify your trend line, basically. All right, so let's go straight into the examples I have for us today and see what it looks like on the charts. All right, so I'm just going to take a screenshot of this, or you can take a screenshot of this, all right, and then study better during your study time. All right, so what do we have here? So over here, this is on the daily time frame, okay. So you can see this. First of all, you said you want to identify your trend, right? You want to identify whether the market is is trending up or is trending down. In this case, on the daily time frame, what do we see here? Okay, this very area, we see that what price is in a downtrend. Okay, so this is a break of structure to the downside, another break here. Okay, so we've identified that price is what in a downtrend. So the next thing is that we want to look for what the lower highs to connect. You can see we have this, we have this. So we'll go ahead to do what? Connect it. Now the rule is to connect the lower highs from the highest or the lowest point of the week. This week at this extended part of the candlestick here. All right, the wicks without intersecting the body. Some people can also draw from the body. Okay, like for example, you can draw from here. It's still okay, but I prefer to do what? To draw from the wicks. Okay, like something like this, you can draw from the body, but it's, for me, it's not so accurate. Okay, so what I rather do is to do what? To draw from the wicks. That is the highest point of the candlestick or the lowest point of the candlestick, and stretch it out. So now you can see we had the third touch point here, and price did what? Sold off from there. Literally, it sold off. So my main example, okay, let me just show you another on the daily time frame. You can see this is what, from here the trend changed. Okay, remember, you always want to identify the trend first so you can know whether you are buying or you're selling. So I had a break of structure here. Then next thing we have what? We have this low, and we have a what? A higher low. So at this moment, you go ahead and connect it. All right, and you can see on the third touch point what the price do. You can see at the third touch point, price did what? Came, touched it, and what? Continue the trend. Boom. You see that? So meanwhile, price took this as liquidity, this low right here as liquidity. Tapped into our trend line and bought. You can see the massive buy. You can see the massive buy all the way here. Okay, this is over, let me see, this is over almost 500 pips. Okay, just almost 500 pips on Euro USD. Okay, so all right, for my main example, I'm going to be showing you that on the 4-hour time frames. Okay, because even in all these pullback legs right here, we have a minor trend. In all these pullback legs right here, we have minor trends. Okay, on the 4-hour, even here, this whole area, we have what? We had what? Minor trends. Okay, so that's one thing about different time frames. On the daily time frame, price could be selling, but on the 4-hour, price could do what? Be on a pullback or a reversal, sort of like a counter trend structure. Okay, so if you look down on the 4-hour, you would see what's happening. Right, so first example, you can see it here. This was the pullback structure. This is what a pullback structure, because price does not just keep going down and down and down. Okay, when it goes down, it pulls back and breaks structure again to the downside. You can expect what? A pullback. You can see that, a pullback. So on the lower time frames, this pullback can come in as a whole trend on its own. Okay, before it continues, it now breaks the lower time frame structure and continues the bigger time frame what? Narrative. You have a pullback here again. Okay, you have a pullback. Okay, and continues, but in this case it decided to reverse. All right, so that is what we have right here. So on the 4-hour, we can see what? A clear uptrend. You can see this was a break of structure. All right, and then what do we have? A low and what? a higher low. Connect it, and there you have it. Then also you can see from here, I can decide to draw it like this. Okay, I'm not still wrong. I'm not still wrong, but I prefer to draw. You can see price still came here, but right, but I'll rather come in with a steeper trend line. You can see when you see that price didn't get to your trend line and got to somewhere and started buying again, you can as well connect those highs. So you can see here we had another higher low. So you can start from here and connect it again and stretch it. You see? So, and you can see on we had this will now be a new trend line, right? First touch point, second, and you can see on the third touch point we had a buy. Okay, even on the fourth touch point again we had another buy. You can see it. So imagine if you didn't draw this, you would have still be waiting for price to come back to this first trend line that you drew, and price might never get there and just keep buying. Okay, all right, so that's what I'm talking about. So let's see what happened. Now, after price has tapped into your trend line, you want to go down on the lower time frame to look for an entry. Okay, you want to go down to lower time frame to see the candlesticks, the price action that printed there. Okay, so that still brings us back to what? Candlesticks confirmation. And to help those of us that do not understand candlesticks or price action yet, I'll be dropping a free PDF in the pinned comments below. Alright, so do well to use the link and go learn the different candlesticks patterns, alright, that we're talking about. So over here, my entry time frame is what's on the 15 minutes. So I just go down to the 15 minutes to see what's happened there. Let's go. Alright, so this is the 30 minutes time frame. Okay, I couldn't go any further, so I had to use the 30 minutes time frame. So you can see, this was the new trend line, right? So second touch point. Alright, and then look at what happened. Something very interesting happened on the third touch point. We have an engulfing bar pattern. Alright, so an engulfing bar pattern is simply, let's say if you want to buy, you want to see a bearish candle being closed above by a bullish candle. So this is a bearish candle. Let's say it comes into your trend line. Okay, you want to see a bullish candle opening and closing above the bearish candle. So what this simply means from a price action point of view is that the buying volume, okay, has overpowered the selling volume, okay, and closed above this red candle. So basically you can expect buyers have come in and can now push price upwards from your trend line. Okay, and place your stop loss beneath. All right, so that's what we have right here. Okay, this is an engulfing. You can see that's what we have right here. This was a bearish candle that tapped into the trend line, and the next thing we had was a bullish candle or a buying candle opening and closing above this selling candle. Okay, so in that case you can use this as your confirmation to go long, placing your stop loss beneath that low. Right, and of course you can have your objective or subjective target. Right, so this would have easily given us a 1:4 using, probably if this was on the 15 minutes, you would have had a much earlier entry. Okay, So let's see. And the same thing here again. It gave what? A fake out and still did what? Still bought. Okay. Then it broke it, tapped into our first trend line. You can see it right here. And still what? Bought. Okay. So after it broke it, then it retested the trend line and did what? Sold. So we have this to be our first touch point, second, third, fourth, this entire area. Okay, this was a fake out. And then what happened? See, price broke on the fifth time. Okay, retested and what? Sold. So let's look at each and every of these entry points one after the other and see the candlestick pattern that printed there. Okay, so for here on the 30 minutes I can see what's a rejection. Okay, this is a rejection candle right here. You can see this pulled down and then was rejected by the buyers and closed above. So that already signals what? Bullish momentum, that buyers have stepped into the market. So entry would have been right here on the close of this candle, stop loss beneath that low. All right, and let's see, 1:4. Okay, so because that's smashed, then over here again I can see what's a powerful morning star, a morning star candlestick pattern. Okay, so the logic behind the morning star order block or the evening star, okay, they are basically the same, but the morning star is for the bullish momentum and the evening star is for what? The bearish price action as well. So the morning star order block is basically, let's say you have your support right here, for example. It could also be a trend line right there. Okay, so remember, you want price to what? Pull into your point of interest first, right? That means you're going to be having sales along this leg. Okay, sales along this leg. All right, now what you want to see when price gets here, okay, is a series of sell candles. So let me show you that. Let's say a series of sell candles. Okay, this was a sell. This was another sell. Okay, and let's say maybe this is the final sell, right? That then did what? Tapped into your area of interest. Then you have like an indecision candle or a doji candle. Okay, something like this. Something like this, and then a bullish momentum candle showing up, okay, and closing above this one that is in between. Okay, closing above it. So you have this to be what? A bullish candlestick. All right, so the scenario is a sell, then a small candle in between, and then what? A bullish candle. The inverse would be what for a sell scenario. So when you see something like this from your support, resistance, or trend line, you want to do what? Buy. Okay, you want to buy. So I'm not teaching on candlesticks in today's video. I'll subsequently be releasing a video on candlesticks psychology and candlestick confirmation. Yeah, so either of those. So do well to follow me and turn on notification bell and subscribe so that you be the first to get notified whenever I drop more videos, okay, like this. That's really going to be helpful. All right, So let's just go on, and you can as well in the meantime make use of the PDF that I paste in the pinned section, right, in the pinned comment section, yeah, to also learn these candlesticks patterns. All right, so that's exactly what seen here. Okay, where is it? All right, so this is it right here. We have a morning star, and then we have a buy. Okay, that's our stop loss right there. And we have what? A buy. Okay, this gives us about a 1:3, right, before reversing. Same as this fourth touch point. This was a fake out, still closed back in the range, took out this liquidity or this high. Okay, and then here we had the breakouts, retest, and the sell. Okay, then you can see that on this was the third touch point, okay, of our first trend line, and price actually did what? Respected it, and still what? But all right, only that it had broken this first trend line, so it retested from there, sold, and still came, retested this one again, retested this again. Sorry, let me delete this, and still what? Okay, so it broke the first trend line and sold, still broke the second one, retested it again and did what? And sold. So you see how profound, okay, and efficient this strategy is. Okay, let's see another example. We have here on the 4 hour. This is a 4 hour structure. All right, so this is what, remember, you first want to identify the structure, all right, or the trend. So this is a break of structure right here. This is a break of structure, and then we have what? A low. And so we have what? A low, and then this was another break of structure, leaving us with a higher low. So connecting these two lows, that gives us what? Our trend line. That's our trend line right there. Then you can see what happened on the third touch point. Price did what? Respected it. Okay, and but let's see the price action that was printed right there on the 15 minutes. All right, so over here on the 15 minutes, this is the third touch point. You can see this was the first, second. All right, we've even had multiple touch points here on the lower time frame. You can see we had what? A morning star here, a morning star. Okay, we also had another, like a morning star here too, and price started pushing up also. Then over here again, we still have a morning star, which is our third touch point, right, from the bigger time frame. It was a morning star, and our entry could have been like this, placing your stop loss below the trend line or that lowest point, right? Then let's see, 1:4 smashed. Okay, or you could have just targeted this high, all right, and that would have been easily taken out. All right, then price came over here, give us a fake out, a fake out. Okay, these are all fake outs. Sorry, use the transparency. All right, before the main breakouts. This was the main breakouts right here. Okay, so I'm still going to release a video to understand a true breakout, okay, both on support and resistance and also in trend lines. These were all fake outs. This was the main breakout, okay. This was the main breakout right here. It was the main breakout, and price came back, retested, and boom, started selling massively. All right, so watch out for my subsequent videos. You're going to be learning a lot, guys, even on how to utilize the strategy even more. All right, so let me show you. We have more examples. Okay, you can see even right here, this was on the 4 hour. Okay, delete this. It was on the 4 hour. I had this touch point, I had this break of structure to the upside. Okay, I just connected this low and this higher low right here. You can see it, right? Connected it. I personally took this trade. Okay, I personally took this trade, like, and I watched it play out. Okay, I first got a sell from this daily trend line and then exited here. Okay, I even posted the trade on my Twitter channel. All right, so over there we had like an engulfing, right? We had an engulfing, and then price started buying. So also you can also see it here. Let me delete this. You can also see it right here. These two lows, this first low and this other low. Alright, connect it, and you can see on the third touch point, price did what? Still bought. We had rejections, okay, on the lower time frame, and price still did what? Still bought all the way. Okay, let's say this was our entry using the higher time frame price action now. Yet we still had like a 1:4. Okay, so if you had gone down to the 50 minutes, let's see if we would have gotten a much more better entry. You would have been getting a higher risk to reward, okay, and a much earlier entry. Let's just see quickly. All right, so this is it, guys. Let me delete this. Okay, you can see over here we had this rejection. We had this rejection right here on the 50 minutes. You can see it, right? So thereby reducing our stop loss, okay, and increasing our reward. All right, you can see this was a much earlier entry. So targeting that high, automatically our risk reward has increased from 4, okay, to 7 RR trade. You can see that why it's good to use the lower time frames for confirmation. Okay, 15 minutes price action basically can actually give you all the confirmation you need. All right, so let's see on the daily. It's everywhere on the charts. It's everywhere on the charts. Okay, let me look at the 4 hour. Okay, on the 4 hour, we also had this here after price broke this trend line. Okay, we also had this coming downwards like this. We had this coming down like this, and then we also had this. You can see how that goes. So this was what the first trend line upwards here, 1 2 3 touch points. Then the next trend line came in steeper. Okay, this is the first touch point, the second. On the third, what did we have? We had rejections on the lower time frame, and we had what? Sells. Same on the fourth, right? On the fifth, what happened? Price just broke through it straight on, okay, and then came and did what? Broke this first trend lines that we had here. This was the first, second, all right, third, Okay, and then right here on the fourth time, it broke it. Okay, and then retested. You can see how we just retested. We had a rejection and then this massive buy. Okay, very massive buy. About, let me see how many pips. Okay, about 400 and something pips. Okay, right from that very trend line. You can see, so you can see that this strategy works perfectly well. Now, other people using other strategies, we have many strategies out there. Okay, SMC and the rest. We are still expecting that Euro USD is going to pull back to somewhere here. Okay, before it continues the buy. But you can see that using the trend lines, you would have been able to catch this trade, which of course is likely still going to come back and take this as liquidity, yes. But you would have first caught this move first, you see, using the trend lines. Okay, let's just see exactly what happened, because we have a clear 4-hour rejection bar here. You can see that, right? Very clear 4-hour rejection bar, but that will not give us the best of entries. So we always want to go down to the 15 minutes to get the earliest entries as possible. You can see this is a powerful rejection on the 4-hour. So let's look right there on the 15 minutes and see what candlestick printed there. All right, so I've gotten an entry. All right, beautiful. You can see we had this beautiful rejection right here, and that would have been what's our confirmation, or you would have even waited for bullish momentum to come in, which is still here. So you still be okay entering here. You still not be wrong entering here, but you could have well waited for better confirmation. All right. So, but basically, you can always enter what on the rejection bar, which is right here. Okay, stop loss below that low, and then targeting this high. This is the 4-hour swing high. You can see very beautiful one. 1:11, right? Very beautiful one, and the TP was smashed. Take profit was smashed. That's how profound the strategy is. Okay, so trust me, the trendline strategy is one that is highly underrated but highly profitable also. That's one thing I love about the trendline strategy. It is what's extremely simple, but also what's extremely profitable. That's just trading for you. The simpler it is, the more profitable. Okay, you just always want to keep it simple. So that's it for today, guys. Okay, do we have more examples? All right, so let me just show you now. Remember, you see we have a high here, we have a higher high. I can decide to connect this, all right, and see how price reacts when you get there. Okay, but you can see we didn't have any reaction, so price just broke it, right? So that's just the logic, that's just the way to identify trend lines. All right, so I want you to go back to the charts, identify the trend lines, pick any pair of your choice, major pairs, okay, and identify trend lines on the charts and go down to the lower time frame, the 50 minutes time frame, the 1 hour time frame, okay, depending on your entry time frame. You can even go down to as low as the 5 minutes time frame, okay, and look for candlesticks that print at that area that tells you, okay, price is about to go long or price is about to go short. Okay, you don't just enter on the trend line because it has gotten there. Okay, price can decide to break it, you see. So the main source of this strategy is what? Being able to identify the candlestick patterns that tells you that price is about to go your way. All right, so that's it for today's video. Please like, comment, share with your friends so that they can also learn. All right, with that friend that you know that has been struggling to be profitable, share this video with them, okay? And trust me, they're really going to learn a lot and they're going to thank you for it later. All right, and also subscribe so you can always be notified when I release more videos like this. All right, trust me, you don't want to miss them. You don't want to miss the package I have, all right, coming on my channel this year. You don't want to miss it. All right, so see you guys in the next one, and until then, keep studying, keep practicing, stay disciplined, stay consistent. Your results will definitely show up.